all, and welcome back. I hope everyone is doing really well. Really interesting episode today, as we're going to be covering a lot of stuff that's been happening across the crypto space. And of course, lots of stuff happening on Hedera as well, as we potentially start to creep very slowly out of the bear market that we've been entrenched in for arguably the last 2 years. It was in fact the 12th of November 2021, I believe, was when we saw the last Bitcoin all-time high. And that was when as well we effectively saw $2.5 trillion in terms of market cap. And we did see a further push up to 3 trillion as we got nearer and nearer that high. That being said, as we look at the market cap today, we are now back at the $1.5 trillion US dollar range for the total cryptocurrency market cap, there or thereabouts. So we have climbed significantly out of that sub $1 trillion trench that we were in for a long period of time. Things are getting quite frothy at the moment. We've seen some price action for a lot of the layer one altcoins, such as Ethereum, and either other blue chips, of course, like HBAR, have been doing fairly well recently. That being said, though, the Fear and Greed Index is now showing a historical greed indication. This, of course, is a sentiment analysis tool. I've covered it on the channel before, but typically what we tend to see is when we move into the greed zone, we do see a pullback, a retracement across the asset class itself, as it's clearly getting a little bit exuberant. We can see there on the last month, we were in the fear zone of 45, last week 68, and we pushed towards 69. If we look over the historical, and I flick this over to, say, the 3 months chart, we can see we were hovering around 30s to 40s for quite a period from August onwards. And it's since the end of October and throughout November, we've seen a large ramp upwards into these high 60s. In fact, if we go back further on that time frame, we can see we were even lower when we saw those larger drawdowns. Typically, what I tend to like to do is average in when we're in fear or maybe even neutrality. And it's always a good idea to take a bit of profit off the table once we're in the greed zones. Crypto markets are very, very cyclical when it comes to things like this. That being said, I wouldn't obviously go and trim massive amounts of your positions, because we are still nowhere near having blow off tops that we would come to expect from a new crypto cycle beginning. And we may now see decent price action throughout the end of 2023 as we move across into 2024. The macro is starting to shape up to be a little bit of a better position for risk on assets. Anyway, enough of the sort of total market. I wanted to do a deep dive on Hedera again, as we've seen a lot of different announcements from across the space, as many different dApps and development teams have been building throughout this bear market. Something to note immediately is that Hedera is now being included on Chain Inspect, which is a Web3 decentralized application, and is effectively tracking the live transactions per second for a bunch of different layer ones or layer two networks. Interestingly, or of course, as many of us would know, max recorded TPS on here doesn't appear to be 100% correct. Metrica has a different max recorded TPS, but of course Hedera taking the #1 spot crown there, even against the likes of Solana. Of course, we spoke about this at length on the channel once we take out their vote transactions, etc. But more interestingly, it blows everything else out the water, such as Bitcoin, even Avalanche there. You got Phantom towards the bottom in terms of what they could process. Of course, Phantom, some would say or argue, it was effectively a clone of Hedera in its early days, and obviously hasn't done this well recent times. Interestingly enough, though, the eagle-eyed of you would notice our transactions per second on Hedera have actually taken a second ramp up, and we are now seeing above 2,000 transactions per second on the daily basis. And that appears as we've seen much more scaling from the likes of @mo.io, and we have seen some very, very large numbers on the Hedera testnet, potentially seeing some more large-scale use cases that are getting ready to ramp up and deploy on the mainnet. Some other interesting notes as well, though, actually about the wider crypto market. Things like the ETFs keep taking off, as well as other companies are buying into crypto. So we are starting to see the institutions move in, and majority of them are acquiring stakes in cryptocurrency as almost a treasury hedge for themselves. So we can see here China's largest board and card game company, Boya, to acquire $90 million of Bitcoin and Ethereum. And of course, this is off the back of things like $9 trillion asset manager BlackRock has officially filed for a spot Ethereum ETF, as well alongside their spot Bitcoin ETF with the Nasdaq. posted out a tweet here. If you're not following me already, make sure you follow me over on Twitter, as I do post a lot of different infographics and snippets of news before they go into videos such as this. But I have mentioned, of course, in several different videos that Bitcoin ETFs will be first, quickly followed by ETFs for varying assets and portfolios from across the crypto space. Effectively, this is what exchange traded funds are good at doing. They're good at buying baskets of goods. ETFs are, of course, likely to be a huge driver in the next leg of market cap, and that's the next leg is approaching very, very quickly. And of course, we'll see these spot assets first, Bitcoin ETFs, Ethereum ETFs, and then potentially we'll see layer 1 ETF portfolios that get released, and then maybe other things, store of value, etc., etc. There'll be tons of different ETFs that go live as we ramp up towards mass exposure for institutions and retail alike. Wanted to quickly cover as well, SourceSwap Labs V2 will be launching on Friday, November the 17th at 9:30 p.m. UTC. Hopefully you guys did have a play around on the testnet. And they've already shipped out all of those rewards if you were eligible, if you did any of the bug bountying themselves. I will try and do another video sometime this weekend once it's actually gone live on the V2 to see if there's any little tweaks, as well as cover and pick up anything else that I didn't cover in the couple of videos that I did release on it. Interestingly as well though, Source has been doing quite well recently alongside the total value locked on Hedera. SourceSwap's ascent continues as they secured the 33rd spot on DeFi Llama and are proud to represent Hedera among some of the top protocols in decentralized finance. And of course, just getting started. SourceSwap V2 launch is imminent with details and to be announced soon. So obviously this came out before that previous tweet I showed you because the V2 launch will be this Friday. A couple of other tweets as well I put out because some people were asking me what will be happening to the Source token itself. Is there any positives to come out of the V2 change? So not only have we got the introduction of this CLMM alongside the V1 AMM, we've also got some core tokenomics changes. So SourceSwap 2 not only shows the introduction of the CLMM protocol, but also changes the Source tokenomics. One major being a 60% emission cut, which of course being really important as token supply is a fundamental to supply, demand and pricing. Econ 101 or Economics 101 would effectively tell you that if supply moves from point A to point B, i.e. the curve shifts backwards in terms of the quantity supplied, price typically would shift vertically from P1 to P2, particularly in the short term. Of course, the total token supply isn't changing per se, but the emissions reduction over time will be changing. So we'll be seeing less negative sell pressure or downward pressure, let's say, on the price for Source. Take that with a pinch of salt because that is what the economics would say and how the tokenomics should behave. We should see less downward pressure on the Source token. So in theory, we should see some positives from that move. Here's another infographic that I actually did put together and post out on Twitter the other day. So a summary again of those SourceSwap V2 tokenomics and what they do effectively to the Source allocations. We've got 3 significant changes. And of course, the SourceSwap docs outlines all of this, but a 60% reduction of newly minted Source taking place, an extended release schedule from 3 to 6 years. So effectively, they're doubling the amount of time for that release schedule. We've got a shift of tokens from V1 incentives as well across to the DAO. What this means is effectively newly minted Source tokens will also be not only reduced, but reallocated, as we can see in the graph here. So before we had 91% there or thereabouts being provided back to liquidity incentives on the V1 AMM system. That will shift across to 47.2% roughly to V1 liquidity incentives, because of course we'll have V2 pools as well. Dev cut remains the same at just 9.09%. That remains unchanged. And then the new introduction of the Source emissions going across to the DAO treasury itself. Previously, we had 0%. Going forward into the future, the remaining differential, this block that's missing effectively from the V1 liquidity incentives, moves across to the DAO treasury at just shy of 44%. Interestingly, they do mention in the docs as well, the DAO treasury allocation may be used in part for the V2 CLMM liquidity protocol incentives, similarly to how 47% is being used for liquidity incentives on V1. Of course, being a DAO, they can do as they see fit with that as well, which is very interesting and cool. So that's sort of enough for source swap now. Of course, I will be hopefully doing another video this weekend, taking a quick look at some announcements from Hedera and the HBAR Foundation themselves. Hashgraph LLC is pleased to submit a comment and recommendation to the IRS regarding proposed rules, gross proceeds and basis reporting by brokers, and determination of amount of realized, as well as basis for digital asset transactions. So gross proceeds and basis reporting by brokers, effectively a public policy to the IRS has been submitted by Hedera. This proposed rule is of course a game changer, and we've seen, as I covered in videos previously, there may be some involvement with Hedera into the future for things like FedNow, which effectively is a sort of smart system going forward into the future, which is going to rely on things like cryptocurrency. And one of the suppliers into that service was named being Hedera. Not only that as well, we've seen massive ramp-ups from 𝗟𝗚𝗡𝗥𝗥𝗔𝗟𝗦, tracking the carbon emissions of billions of unique items in their supply chain via the Hedera Guardian. This, of course, is Web3 at scale. And as all of us are very familiar, 𝗟𝗚𝗡𝗥𝗥𝗔𝗟𝗦 being one of the largest use cases on the Hedera mainnet, and it's clearly continuing to expand and move into different avenues of item tracking throughout the Hedera system, leveraging Hedera consensus service and token services alongside things such as the Hedera Guardian. Some really cool videos and sort of advertising content that's been put out on Twitter recently by 𝗟𝗚𝗡𝗥𝗥𝗔𝗟𝗦 shows they are clearly very committed to continuing to expand this platform and potentially offer it out to more of their customers, in turn seeing more transactions being put through on the mainnet. Another major use case / application that we'll be seeing deploy at some point on Hedera, hopefully, is 𝗟𝗓𝗏 World, or integration, I should say. So imagining a future where sports industry effortlessly integrates with fans, offering authentic, engaging and rewarding experiences. Here's to building a platform like never before. Get ready, the game is set to elevate. So 𝗟𝗓𝗏 World here with millions of users, I think it's 𝗟𝗓𝗏. We're looking to see a one-stop sports platform for MENA and international fans on Hedera, powered by 𝗟𝗓𝗏, or built by 𝗟𝗓𝗏 on Hedera, I should say. That was all mirrored. We've seen Shane Higdon as well, alongside the TIE, hosted at New York Stock Exchange. The world's largest financial firms are utilizing distributed ledger technology, or DLTs. Wall Street is exposed to Hedera through on-chain real-world assets. Things like real-world assets and tokenization is something that we've covered on the channel an awful lot. We've got the likes of Aberdeen, the Diamond Standard, etc. There are lots of different things that are being done behind the scenes to leverage Hedera's predictiveness effectively, as well as scalability and low CO2 and sort of green attributes to tokenize real world assets. Not only that, we've got the stablecoin studio, and stablecoins are being adopted by leading banks. Tokenization strategy for Hedera is coming to fruition. In 2023, the vision is becoming a reality. Recently as well, we had 𝗥𝗘𝗙𝗘𝗥𝗥𝗥, the FCA-licensed digital asset exchange, whose largest external shareholder is the Hedera governing council member Aberdeen, integrate Hedera into its tokenization engine. A part of that integration, Aberdeen tokenized part of its flagship Aberdeen Standard Liquidity Fund, LUX, which is a sterling fund, multi-billion-dollar money market fund, effectively on the Hedera network. So not only it, of course, we had the stablecoin studio. I did a dedicated video talking about that as a recent announcement. And we're seeing lots of different things take place. Alongside real world assets moving on chain, though, one of the paradigm shifts is in financial transactions being enabled by tokenization on Hedera is micropayments. We had dropCC enabling high cost efficient and instant small value payments in HBAR, USD and USDC, or Circle's pegged tether equivalent. For this work, they were recently showcased by the Federal Reserve FedNow platform, as we covered in a recent video. So there's an awful lot of stuff happening to do with real world assets, micropayments and tokenization that Hedera can natively do that a lot of other layer ones are really struggling with. Really nice roundup here, video here by the HBAR Foundation, though, of everything that's happened from Jan to July to H1 or half one of 2023. January the 13th, Astronova, we saw go live. We had Corp Stage. We had Pangolin Exchange go live as another decentralized exchange on Hedera, of course being multi-chain. Humans.ai, which was lifelike AI NFT avatars. We had Afrofuture DAO, which was an African metaverse. Virtual power exchange, on-demand renewable energy, 𝗟𝗘𝗙𝗚, of course. Zoop, so fan connection platforms. We had Unthink.ai, again, another AI-powered decentralized system. YPay, which was a settlement network. We had Brian Brooks join the board. HBAR Foundation. Lumos Labs, which was a Web3 accelerator. C14, which was seamless fiat on-ramping, I should say. Mint, which was a project migrating from Ethereum to Hedera. We had Fresh Supply Co., which of course is massive, migrating from the MasterCard provenance to cross to Hedera. We had AidTech, launching innovative digital wallet stuff. We had Korea's leading blockchain wallet fully integrate, which was decent. Google Cloud, of course, startup program, which was leveraged by a lot of Hedera developers. We had Consensus 2023. Red Swan, $5 billion real estate company builds, obviously a early one to Hedera as well. So many different things that we've had across just half 6 months of 2023. 𝗟𝗚𝗙𝗘𝗥𝗥𝗔𝗟𝗦 here as well, eco-friendly NFT marketplace with 𝗥𝗘𝗙𝗙𝗥𝗥𝗔𝗟𝗦, which I covered, which is a no-code platform for Hedera. Symphony. So many different things if we just scroll through that we effectively have seen go live or different announcements across the course of 2023. There is so much happening and so much will continue to happen on Hedera as bear markets have been for building, and Hedera has taken that quite literally to heart. Hopefully you guys did enjoy this video. If you did, leave a like, drop a comment if you've got anything to say. I do try and respond to as many of them as I possibly can. Until the next one, I'll catch you then. Cheers.